Hello. So, since from the last time we talked, we discussed Elliott waves, impulses, and corrections, and we agreed that we were going to go deeper into Elliott waves, impulses, and corrections. So, let's start with impulses only. Let's talk about what impulses are and the rules about impulses. Only after we understand what they are, then we can move on to corrections, and then we can put it all together. So, impulses. Impulses are the movement that is going in the same direction as the trend. So if price is falling, impulses would be the candlesticks that are following the direction of the trend. So when you open your chart, what do you see? We see price is going up. All right. Right now, what we see is price is going up, right? So if price is going up, then what is our impulses? What are our impulses? We can say we have one, we can say we have another one, and we can say we have another one. Well, this is not confirmed impulses, but these are big bullish candlesticks in the direction of our trend. So we will only know if it's an impulse after it passes the high. So what are we saying? We are saying we have 5 waves, right? So impulses would be the waves that are going in the direction of the trend. Since price is going up, that means our impulse waves are going up. All right. So what do our impulses have? They have a high and a low, right? The high being the beginning, the high being the end of the impulse, and the low being the beginning of the impulse. Now, if price is going down, we have the same similar situation. Price is going down. That means our impulse waves are going down, right? So you will have a high being the start of your impulse and a low being the end of your impulse. All right. So if you have the first wave, right? So we have the first wave and then we have the third wave. All right. So what are we saying? Let's remove everything. All right. So we are saying we have one, right? This is our first. Then we have a correction being our second. And then we have our third being our impulse, right? And then we have a fourth being our correction. And then we have our fifth being our impulse. All right. So 1, 3, and 5 would be your impulses. What are we saying? 1, 3, and 5 will be your impulses. Now take note where it's starting. Like we said, if price is going down, you have the high as the beginning and the low is the end. So that means this is the high and this is the low of your impulse. This would be the high and the low of your impulse. The high and the low of your impulse. All right. So if all of our impulses are in the direction of the trend, that means all of our corrections are against the trends. That will be your 2 and 4. So since price is being pushed in a certain direction, it only makes sense for the impulses, the thing with the pressure, the thing with high volume to push in the direction of a trend. It won't make sense for our corrections to be bigger than the impulses. So impulses will always be the big movement in the direction of a trend. All right. How will you know the direction of the trend? Every time you open a chart, you will know that price is going up. You can see it with yourself that price is going up or price is going down. As we can see from this chart right here, what is the direction of our trend? Price is going down, right? No matter what it's doing, price is going down. So if it is going down, what is our impulses? What are our impulses? What's the movement that's pushing in the direction of the trend? We have one, we have one, we have one, and we have another one. All right. So those are our impulses in this whole movement that we've been seeing here. And our corrections, correction, correction, right? And then you have, as we said, impulse, impulse, and impulse. All right. So that is the most important thing that you need to understand about impulses. Impulses will always be bigger than the correction, and they'll always be in the direction of the trend. All right. So for an impulse to be valid, what does it have to do? For an impulse to be valid, it needs to break the law that was created by the previous impulse. What do I mean about that? What do I mean when I say that? When we say for a law, for an impulse to be valid, it needs to break the law that was created by the previous impulse. For example, in this situation, price created a law, right? So price fell, created a low, right? Rejected a little bit, went up, right? And then it came back, right? And then at that moment, at this area, it broke out, it kept pushing down, all right? So what area are we looking at? We are looking at this low that was created by price, as you can see, right? Price broke down, as you can see, retested with this candle that you have here, another final retest with this candle right there, and then price pushed lower. All right, that is price breaking the low that was created by the previous impulse, pushing price lower. All right, as you can see, price created a low, rejected a little bit, created a high, and then pushed lower. As you can see, breakout candle, confirmation, pushing in the direction of the trend. Correction, retesting our previous breakout, and price rejected in the direction of the trend, pushing lower. Which low did it break? So if you didn't manage to catch your trade up here, you can always catch your trade when price breaks out over there, pushing price down, or when price retests the high, pushing price down. All right, so we need to make sure that you understand impulses before we can look at corrections. And once you understand impulses, we look at corrections. And once you understand corrections, we can look at the whole picture and tell the story that we need to tell from that picture. All right, any questions? You know what to do.